right, welcome everybody. I'm really excited to be here. Thank you for allowing me to help you guys discuss this really pertinent issue or topic. So, it's after lunch, we're all a bit lazy, so maybe I thought I'd also start with a bit of an interactive exercise, although no finger pulling here necessary. Maybe a show of hands, and nobody's judging. How many people here say that they have a comprehensive understanding of blockchain and cryptocurrency? Okay. 0 people. 2 people. Okay, that's cool, guys. So this is just to frame the challenge that we're setting out for our panel. So I guess just to frame the conversation a little bit, what we're interested in discussing here today is the trajectory that we've all collectively been witnessing globally, from kind of the beginning of blockchain becoming popularized in the early to late noughties as its primary and most popular application through crypto and digital currencies, and how it's evolved through this time as quite a controversial topic, but something it's hard to escape in the news and that we've seen a lot of. And in parallel, as people living on the African continent, we've all experienced challenges relating to currency challenges, interbanking, settlement and payment challenges, and all the stuff that we keep talking about in the fintech space. And one of the actual key global adoptions and some would argue valid use cases of the blockchain and digital currency has emerged to be stablecoins, which are essentially cryptocurrencies or digital currencies, tokens or coins that are pegged to a currency, mostly the US dollar. And how these can help offer stability in solving some of the issues that I aforementioned in the continent. So yeah, we have an expert panel here of people who have engaged with blockchain, crypto, and stablecoins at different levels, and they're going to tell us a little bit more about their experience. So before I kick off with questions, I think I'm just going to let you guys tell everybody what you do, and then we can kick off from there.
Hi everyone, can everyone hear me? Is it on? Hi everyone, can everyone hear me there? So my name's Sean Brick, I'm here representing Summit, head up the product and growth side of things there, and basically we are a private market investment platform aiming to close the funding gap, especially in Africa, by connecting our base of international investors across Europe and America to promising African businesses.
Cool. My name is Paul Crowley, and I represent Moment. I'm a Web3 evangelist, and my work is to import the next billion people into Web3.
Good afternoon, everyone. There we go, I think this is okay. My name is Winston Reid. I am the co-founder and CEO of a company called Alvin Technologies, and we specifically focus on enterprise and consumer spend management tools for both banks as well as consumer individuals in emerging markets, with a particular focus on those in Africa.
Priti. I'm the co-founder and the tech lead of informal app. We are a marketplace that connects farmers and buyers.
Hello, everyone. Hi. I'm Laurian, the CEO and founder of a company called Centbee, which is kind of styled as Africa WeChat, based on blockchain. We've been around for about 8 years, and also the co-host of a podcast called The Centbee Show, which is explaining to people the difference between blockchain and crypto, and there's a very big difference.
All right, awesome. We'll get to that, I'm sure. So maybe, Sean, I'm going to start with you, because earlier we were discussing this issue, and obviously we are at a startup and VC investment-oriented conference, but as we were trying to break down this issue, you mentioned that you think that there are a lot of people who are quite interested in discussing solutions to these problems and the tech behind these, but there's a need for us to really dig into the actual pain points and the problems and understand whether or not crypto is irrelevant, or crypto or Bitcoin or blockchain are relevant tools to address these problems. So maybe I'm just going to hand over to you to give us a bit of an overview of the pain points and the solutions, and we can start from there.
Yeah, sure. So I'm going to just touch on a few points that I'm sure everyone here has been familiar with. So recently I was paying a business colleague of mine in Slovenia, and we tried to use the normal banking system. The payment, I went through the normal flow that you would go through, used my bank account, and paid using SWIFT. This payment took about 7 days to validate and for him to receive the money. my transaction cost was, or transaction fee was around 7 to 10%, and I had zero transparency within the process. I did not know where my money was, if he ever received it, or any sort of transparency within the process. So I want to just put that as what the current status quo is within cross-border payments, and then how stablecoins offer an alternative to this. So currently, or post that, I decided to explore stablecoins as an alternative means of paying him. And I went onto Binance, I created a wallet, I put in his wallet address, and I sent the money. He received the money in about 48 seconds. The transaction cost was 1.5%, and there was no worry about transparency. So what I'm getting to here is that there is a real world problem. Payments are expensive. They take long, and that is a real barrier for many SMEs, and really this hits the lower income level, because if you are a lower income worker in South Africa and you need to send your money home, that transaction fee, that 8 to 10%, is still the same, and that really hurts you a lot more than on the top end. So this is a real problem to solve for not only the larger enterprises, but also for the individuals.
Awesome, I think that's a great framing. So, Winston, you were explaining to me that in your experience in working with spend management and with enterprise and SMEs, as well as banks, and actually also as a foreigner and an expat in different countries across the continent, you've had a lot of experience with cross-border transactions, and also not just on the payment side, but also on the financing side, for companies who need liquidity and need to make upfront payments to make stuff happen, essentially. So, in the spirit of that, could you tell us a little bit how you've seen stablecoins emerge as a solution to some of those pain points, and where you think that might be headed?
100%, and this is definitely one of the, points of passion for me, is how stablecoins represent just a really promising opportunity, I think, for us to democratize access to financial wellness for more people. And actually, I'm going to dovetail off of one of the things that my colleague Sean said just a moment ago as well. So first, I just want to say that we are well beyond past the point of even perceiving that the extent of cryptocurrency is just going to be around speculation, or otherwise for it to be an alternative to gambling or just very risky behavior. And also, by the way, at the outset, that was a very legitimate concern. A lot of people, and I think Laurian might speak to this in a moment, a lot of people were treating all of the cryptocurrency space as basically just Bitcoin, and which of course is extremely volatile. Unfortunately, what we're seeing is that we're past the point of thinking that that's the end of the scope. There is a very demonstrable. It's very demonstrably the case that there's evidence of invisible and visible utilities for stablecoins, and I think at a high level, what we're seeing is that I would bucket them into three kind of macro level buckets. So the first one would be stablecoins as a store of value. Sean just spoke to that to a degree just a moment ago. The second piece would be stablecoins as invisible infrastructure, or what I would consider like an invisible layer behind existing payment technologies that people already recognize, people are already familiar with. And the third piece would be stablecoins as a bridge to global trade and also for resource access. So on the first one, one stat, and I'll keep this brief, but one stat I just get so excited about whenever I think about it, is that currently today, across sub-Saharan Africa, 43% of all cryptocurrency activity is actually stablecoin, almost half of it. So again, like this perception that the extent of cryptocurrency, it's a lot of woo-woo. It's just we're past that point, and people are proving it. It's becoming sticky. And what I think what this represents is not just a financial shift, but it's a behavioral shift. It's a cultural shift. I think that's very exciting. And exactly to what Sean was saying, is now today. If you're a rural Kenyan, if you're a rural South African, or otherwise you're in an underserved community. Right now, there are millions of Africans who, for the very first time, basically are able to access a U.S. dollar. And basically, what's happening is if you're earning otherwise in Naira, and you just say last year you saw your savings basically depreciate by half in the course of about 8 months quietly. This is your hard-earned income, and you are saving. And so you're saving it in Naira. What stablecoins offer as an alternative is for you to park part of that value into basically the value of USD at the time, and then whenever you need that Naira in the future, you can then reconvert that back into Naira to then do whatever transactions you need to do. So I'm very encouraged by that basically what that phenomenon represents in terms of people being able to park their hard-earned money with more stable stores of value. So that's the first piece. The second piece in terms of it being an invisible layer. I mean, ultimately, the way that we're going to get people using Web3 is not going to be, us trying to get our parents to be crypto experts or by, going around and trying to educate folks on Web3, right? It's going to specifically come from people being able to use the same tools that they otherwise are comfortable with, they're familiar with, they recognize, and then for Web3 to be behind it to power more effective efficiencies. And so one kind of key example of this is that we are, and I'm just so excited to see more of this. So Stripe, this global payments company that I think a lot of people are familiar with, Stripe just bought one of the most major stablecoin issuing companies called Bridge, or they issue the ability to use stablecoins to businesses. They just bought Bridge about like 6 weeks ago, or at least it was announced 6 weeks ago. And what that represents, and I think what we're going to see a significant more amount of in the course of literally just this year, are payment experiences where you would see, say, the cost, actually in our case, the cost of a flight in US dollars or in ZAR. You're going to pay for it via your debit card or your credit card, or maybe you can do a bank transfer. But then on the back end, basically what's happening is at the point of payment, that money is instantly converting, say, to USDC, and then it's able to be remitted to the merchant basically instantly. Exactly as Sean was saying, if you're doing an international transfer, you're looking at maybe 7 to 8 business days. That not only is really cumbersome for individuals, but especially for merchants. Especially for merchants. And that brings me to my last point, which is stablecoins as a bridge again for global, basically a new avenue for global trade. If you're a merchant right now and you're trying to pay a supplier, you're either going to be limited in terms of the suppliers that you can work with, especially if your product requires like an on-demand kind of like transaction by transaction. You would like to be able to engage with a digital supplier. It requires a lot of back and forth. Now, what stablecoins are enabling you to do, per Sean's example, and this is also something that we've experienced as well at Alvin, is you don't need to provide a significant amount of upfront capital anymore. Currently, there are a lot of SMEs who are very aspirational to wanting to, say in our case, be travel agencies, embed, say, flight booking software into their application. But in order to even turn on an API, oftentimes they need to provide all of the working capital that they're going to need, or that they're going to expect to go through that system for maybe 1, 2, even 3 days. It's like how many SMEs across, not just Africa, I mean across the planet, how many SMEs just have $30,000 just to turn on an API to even start being able to make money? So what I'm super excited about, and this is also what we're doing at Alvin, specifically for the travel industry, is enabling for more merchants to not have to worry about providing upfront credit, but then being able to just get live, start making money, and then transaction by transaction that's being converted into USDC, and then being remitted down to the merchant on the back end. So at a high level for merchants, you're able to pay suppliers without needing credit, and then for people, you're able to park your hard-earned money so that you're not seeing it just perpetually depreciate in value over time.
Thank you. So, I'm hearing we're looking at a technology that might address our issues with delays, our issues with having to pay up front, and might just solve a lot of the working capital cycle issues that small businesses are faced with, Priti, I guess of this group, you are among the people who work closest with the smallest business units in Africa, right? Smallholder farmers. I guess we're hearing all of this and talking a lot about how the invisible layer is going to transform how things operate, but many people might be wondering, what does this actually mean for me in a day-to-day context? So what would you say from your experience working with farmers this will mean for their business? And more broadly, if you want to speak to beyond stablecoin, in general, blockchain as a technology, what do you think is the true use case that it has with people that aren't in rooms like this?
Thank you so much for your question. I'm very excited to be a part of this conversation. Blockchain technology, the underlying technology behind stablecoin, Bitcoin, excites me a lot because it's very similar to how I grew up. As you may know, I grew up in a small village in the Eastern Cape. A little farming community, we embrace the bartering system. So what that means is we exchange what we had for what we need. If I'm farming spinach, I go and exchange it to the neighbor to give me cabbages. If I'm farming goats, I can exchange and get chickens. So it was a peer-to-peer. We didn't need a centralized authority to transact. It was instant. I give you my goat today, I get my chickens today, not after 21 working days. Trust was everything because all the verification was done by the community itself, and it was super inclusive. And that's exactly what the blockchain technology does. Today, most of the supply chains we work with are very diverse. You get super small farmers, and then you get big commercial farmers. All of them are meeting the demand of a corporate buyer that has got complex EPR systems, lengthy onboarding systems, and all of them, they do want to transact with the farmer. So similar to food, food is not expensive. What's expensive is the value add. If I dig up a potato and cook it, it's cheaper. But now I have to dig it up, wash it, package it, transport it to DC, package it at the DC, transport it to retail, and hire a bunch of people to look after it. But if it was just a peer-to-peer direct, a potato, like 5 kg potatoes, will leave a farm gate being like 12 rand. But when you buy it, it's like 70 rand because of all the value add. So it's the same thing with payments. It's everything that happens before payment is triggered that causes payments to be longer, to be super expensive. I mean, we've worked with a number of blockchain use cases where you needed about 200 signatures to move a container from Kenya to Switzerland. I mean, there's 200 different signatures, 200 different paperwork. What do you think is going to happen to a small business throughout the process while we are waiting for that? So it's to make sure that we simplify everything that needs to happen before, because the biggest problem is really not the lack of payment system, it's the burden of trust that we need to outsource. So, and then there was another cool use case as well with HSBC Bank. There was a transaction between India and Singapore. Usually it will take like 10 business days to complete the entire transaction. Within 24 hours, all the vetting, all the paperwork, and payments. Everyone was smiling all the way to the bank. Well, they didn't really have to go to the bank. So it was simple. And just as I close, just today, during lunch, I was invited by a big bank. They are based in the UK. They've funded us before. So they want us to aggregate 300 different farmers that are small. Some of them, they don't know any systems. They are based in South Africa. They have branches in Kenya. They have branches in other African countries. So now how do we aggregate how do we create a single source of truth in terms of what happened to the food? Because at the end of the day, the bank has got a reputation to protect, even though they actually want to diversify their supply chain. And then how do we get them paid with different kinds of currencies? So that's what the blockchain does. So if you discuss stablecoin alone without being holistic, it's like debating Ferrari features with Land Rover Discovery in the beginning of a Dakar race.
Wow, I wasn't expecting a parallel to be drawn between fruit and cash, but here we are, and I'm really glad, Priti, that you walked us through that, because I think it's very useful in conceptualizing what we're actually talking about here. So, Laurian, you have been in the blockchain megasphere forever, that's your words, not mine. So you've seen a lot come and go in terms of solutions, of lauded future of something or another. Hearing all about these pain points, the different applications people are excited about, do you want us to walk us through your opinion a little bit, and particularly what you think are some of the key grinding challenges to wide adoption of whatever version of the blockchain makes it closer to, trading a banana for an apple, let's say.
Sure, thanks. Yeah, so, when the question was asked who understands blockchain, very few people raised their hands. And I guess just to start off, it's actually easier than you think. If you think about the way the internet works, it's just really what's called a protocol. In other words, a set of rules about how information moves across a network. That's all the internet is, information moving across a network. And that's what's given us the internet today. And blockchain is exactly the same sort of thing. It's just a set of rules on how to move information across a network. Except the difference here is that it's more like a spreadsheet. And that spreadsheet, that information is then stored in that blockchain. So it's not magical. It's not like it's this thing that's out there that nobody has access to and it's all mysterious. It really is just another internet, another network protocol that allows us to move information. But also, the thing about the internet is that you can't do anything you want on the internet. You know, if you have a business that sells drugs online, you're going to be found out and you're going to be busted. And so the way regulation works on the internet is that if you're a business doing something illegal, you are going to be regulated, you're going to be shut down. And that's really what blockchain is. It's not so much this mysterious thing that allows people to store wealth. That's kind of a misunderstanding. But really just another network, in fact, a network that's been missing since the dawn of the internet, the ability to now use a transactional network to be able to make transactions. And those transactions can be anything. Now, we've been talking about stable coins, and in the same way that you have the internet and you can have social media, you can have video streaming, you can have chat, you can also, on the blockchain, have that sort of thing as well. You can create tokens that represent things, either stable coins or digital assets, things that, you know, maybe real-world assets that link to real-world assets. So the blockchain itself is just a boring, simple, easy-to-understand network protocol. But what becomes interesting is now what you can do with it. And when we look at the way Bitcoin was designed, because remember, that was the first blockchain, and it gave rise to this whole crypto world. But when Bitcoin came along, it says, here is a very low-cost transactional network. If you want to make transactions, you can do it in a low-cost way. But it doesn't mean that it's outside of the realm of regulation. It doesn't mean that government's got no control. And something you might not know, and very few people know this, but Bitcoin was designed to be regulated. It was designed to be controlled so that governments could be comfortable with it. You know, when it comes to money laundering and terrorist financing, you know, if you're a payment business, and Senpi is a payment business, we've got very strict rules around compliance. We have to know our customer. We have to be able to do anti-money laundering checks. We have to do all the KYC and regulatory stuff around it. Now, we as a business are leveraging the network protocol to do that, you see. So a very important thing is that Bitcoin was always meant to comply with the rules around payments and regulation. Nowadays, when you hear about crypto, they say, no, it's about decentralization, a very misunderstood word. Decentralization doesn't mean being uncontrollable or unstoppable. But that's what crypto has now done, because early on in the early days, the anarchist mindset crept in, saying, we want a system that governments can't stop, they can't control, they can't regulate, they can't take our money. You know, everything I'm saying right now is probably resonating with you if you've been hearing about crypto or Bitcoin or blockchain. The message is all about uncontrollable. And of course, governments don't want to hear that. And they are trying to clamp down on these things. Now, stable coins are inevitable. Not only are they inevitable private issuance of stable coins, but government issuance of stable coins. Just the way government uses the internet today, and businesses use the internet today, a single internet protocol to transfer information. This blockchain, what I believe is going to be a single blockchain, and I also believe it's going to be the original Bitcoin protocol, not BTC that you see on these exchanges. That's an alternative version, no matter what people say. One day, this blockchain is going to be a complement to the internet, provide something that was missing since the dawn of the internet, a way to make transactions on the internet in a decentralized way, something that's not governed. So one day, the Reserve Bank is going to issue rands on this blockchain. And the reason why they're going to do that is because they're eventually going to figure out, once crypto implodes, which it will, I'm involved with regulators all the time, and they're coming after crypto. So don't think about investing in things like Monero and all that kind of stuff. But one day when governments realize that blockchain is just another network protocol, just like the internet, they're going to be leveraging that blockchain to issue currencies, issue tokens, issue digital assets. So a thing you must get out of your mind is that blockchain was originally invented to be something that was uncontrollable, unstoppable, uncensorable, unseizable. You know, these are the words that you hear today. It was designed specifically, if you actually if you look at how Bitcoin was designed, it was meant to be something that fits very well into the existing regulatory landscape. So it's inevitable. And the most powerful thing that we've been talking about, everyone's been talking about, is that low cost. When Satoshi invented Bitcoin, it was supposed to be a peer-to-peer electronic cash system, very low cost. And this is the great innovation that is going to transform our lives, because of course we all know, especially in Africa, remitting money, cross-border remittances, so expensive. Even though these little fintechs, Mama Money, Mukuru, they're all trying to, bring down those costs. They can't get it down lower than 5%. They're trying so hard to do that. The original Bitcoin protocol was built to solve that problem, and one day, when we get past the crypto madness, which is going to come eventually, inevitably, we're going to be able to move into this world where costs of transactions are completely reduced down to nothing. But it doesn't mean a world that is unregulated. Remember, Bitcoin was designed to be regulated, a completely misunderstood concept.
Oh, thank you for that education. Paul, maybe I'll hand over to you so we can kind of bring this back to adoption in Africa, in this specific context. As Paul can tell you, over at Moment, they've been building a product that leverages stablecoins for quite some time. So you do understand what it takes to operate in that space in Africa specifically. So what are some difficulties you found, and what do you think is really promising? And yeah, just tell us what your experience is like.
My experience has been exciting, to be honest, and just to echo what my fellow colleagues here have been saying, is that seize the moment in what is happening right now. Don't be left behind in this technology. Stick to being curious about what is happening, because as Africa, we can leapfrog a lot of these industries in what's happening. This is not a technology to be feared and to be seen as this magical sort of thing that does not exist, but it's a protocol that can build trust within each other, especially in Africa as well. Decentralization just means that we all have access to all this information. Just like, I'm sure you've played a game called Broken Telephone. I speak about this in my Handbook of Africa, Handbook for Africa. And same way, it's funny that 2 seconds later or 2 people later speaking, it's a different word by the time it gets to the next person. But what blockchain is, it's like if all of us were writing that word at every moment that you're speaking to the next person, and we all have access to that notebook every time. So it's a centralized place that all of us have information that we can access all the time. So it was pretty exciting to hear that 80% or 90% of the people here have experience with blockchain. But I'd like to implore everyone right now to at least just Google what blockchain is. Go on Moment right now, Google app.moment.so, and be curious about this platform as well, and just get into it.
Since I see you standing over there, are we out of time? You're letting us know. Do we have time for a question or no?
So maybe let's do a quick assessment, get some questions and feedback, and then we give you 1-2 minutes to concluding remarks. All right.
Would you like to make a...
Are there any questions from the audience? Oh, there's one at the back. There we go.
Hi, everybody. My question is directed to him, yes. Just for clarity's sake, right? You said you sent money to someone in Slovenia, and it took 7 days, right? And you said you were charged about 8%?
The speaker's facing this way.
Can you hear me?
Yes.
So you said you sent money to someone in Slovenia, and it took about 7 days before the person got the money. And you said you were charged about 8%. So are you saying that the bank charged you 8% of the value of what you sent?
Yes.
What bank is that, if you don't mind me asking? Yes, that's my question.
I'm not going to go into too much detail on what bank it was or how the process, too deep on exposing the bank. I don't think that's necessary. I think the point I'm trying to get across here is that from what we're all saying is that stablecoins do, or blockchain at least, do provide some sort of value. this isn't just a technology or a solution. There's real value here. And people are already seeing that value. Interesting fact I read yesterday was that the combined transaction value of stablecoins last year was more than Visa and MasterCard combined. It was $41 trillion. People are using this technology. This isn't just something that could be the future. This is being used now. And from an African perspective, this is really important because us Africans are really used to using mobile wallets such as M-Pesa or other forms of it, and it's actually an easier onboarding. It's a more relatable use case, and this is really what's going to drive the future of adoption in Africa, because it's not something that is foreign. This is really close to home.
Can I also just echo what he's saying is also that this technology is to empower merchants, artists, builders, and makers just like yourself. Hence I'm saying just seize the moment and really get into what blockchain is and what it can do for you. At the moment, we're a token marketplace. What we do is we tokenize and we fractionalize real world assets. So whatever it is that you're building, you're making it available for anyone in the world to access and have shares into your business and really build your #1 fans in a decentralized platform. We have another question there.
Because of how much time we have, I'm going to kindly ask. So these are 2 questions, all right? These are the last 2 questions. And yeah, the panelists, can you make the responses also very succinct, such that we wrap up this session?
Hi, Nicholas from Alvin. There's an increasing threat of quantum computing being able to break the encryption used in crypto, and that has a big threat for cross-border payments. What do you think can be done to mitigate against that risk?
I'm happy to hop onto this. I think if quantum computing goes the direction that maybe it will, I think maybe your bank account will also be able to be hacked. I don't think crypto is the only thing that's going to be exposed. So, I think a lot of protocols would be compromised with the use of quantum computing.
Quantum computing is theoretical. At this stage, there is no practical quantum computer.
So just on the point around having a really comprehensive understanding, I think for me, it's less about everybody having a comprehensive understanding. Like if somebody asked me how the internet works, I wouldn't give them a very good answer. But I still use it because I understand how to. And I think that's more the point, right? It's like if people can understand what value it gives them. And to that point, I've been really interested in looking at the Lightning Network and how much of an impact that's going to have for this part of the world. Is anyone on the panel able to shed a bit more light on the Lightning Network?
Yes, the Lightning Network is trying to be a solution for BTC's very high cost of transactions and very slow network speed. But unfortunately, the Lightning Network has a mathematical problem called the NP-hard problem. And it's something to do with the traveling salesman problem. You get a class of problems in mathematics and in life that are unsolvable. And the Lightning Network is trying to solve a routing problem, which is classified as an NP-hard problem, which is a mathematical problem, unsolvable. And if you were to solve that, you would be able to solve the cure for cancer and for everything else. So Lightning Network is fundamentally flawed on a mathematical level. It can't work.
That's a shame.
It's not a shame because the original Bitcoin does exist in another version called Satoshi's Vision Bitcoin, BSV. And that is the original protocol, which is massively scalable at low cost. You don't need Lightning Network. Satoshi Nakamoto got it right. He figured out how to make a massively scalable blockchain. The problem with BTC is that they are going for that maximally decentralized thing because they want to be unstoppable. They want governments not to be able to stop it. So they've artificially limited the block size, so you can only have a certain number of transactions. But that's their ideology that they're trying to achieve, and they're trying to find solutions around that. They should just stick with Satoshi Nakamoto's original idea.